Good day, guys. I hope you're doing well, and I hope you are excited about this particular video. Most of you have been asking for this video of how I trade this particular pair. Right. So before I start analyzing, I just want to tell you something about Crash 300 that most of you don't realize. Crash 300, it's a very volatile pair, and every volatile pair, it also comes with high manipulation. Every volatile pair comes with high manipulation. So if ever you are still yet mastering your thing in trading, if ever you are not yet sure of what you are doing in trading, focus on safe haven pairs. When it comes to whether it's synthetic pairs or it's currencies, focus on safe haven pairs. For example, under synthetic pairs, there are safe haven pairs like your VIX 751S, your Boom 500. Those are safe haven pairs. Why? Because they're not so volatile, and you can even grow a small account trading those safe haven pairs. Crash 300, it's a very, very volatile pair, and it's highly manipulated. And if ever you are still, if you're trading a small account, number one, number two, if you're a beginner or you're still an amateur, you really face quite a number of challenges trading this pair, because such highly manipulated pairs like this, it takes professionalism. It takes someone who is a professional for them to actually understand what is really going on. So without wasting much time, let me just get into the analysis. So this is where I start my analysis on the weekly time frame. Weekly time frame, that's why I start. So on the weekly time frame, I like what happened here to the left. You can see that there's a change of character here. There was a change of character to the left here. Right. After that change of character, I have my major zones here at the top, where I'm expecting this market to come all the way to. Right. I have my major supplies. For example, I have that supply there. I'm expecting the market to come there sometime in the future. I don't know when, but it can happen in the next coming months or whatever. But that's just a long-term projection. So these are my major zones that I've drawn here. My major zones, I have that one at the top, this one where there's a supply, and also this one at the bottom here, right? So currently, Crash 300 is this is the lowest price that it has reached so far. This is the lowest price that it has reached so far. Where it is right now, 25.40, right? That's the first point. So let's go down to the daily. Right. So on the daily, I just refined this. Right, on the daily, what I like is that on the daily we had this break of structure here. So that break of structure there, you can also see that we have another supply there that was left behind. Break of structure, and we have a supply that was left behind. That's the other point. Right. So I expect that supply to also be tapped before the market continues with its bearish order flow. So I'm expecting something like this to happen. Something like this. If it breaks there, we're expecting that lower high, that swing lower high there to be tapped before we go all the way down, right? But this is my first target like that. Right. So after I've done this, the next point now is to zoom in. Zooming in, I want to see the low that broke internal order flow. I want to see the low that broke internal order flow, because that is going to be my swing lower low. Remember To the left here, that's a break of structure. Then here, when I zoom in, the low that broke internal order flow, you can see that internal order flow is here. That is my internal order flow here. That is my internal order flow. That's my internal order flow. If I stretch it all the way to the right, that's my internal order flow. So you see that it was broken. It was actually broken there. Then the lowest point there, that's my swing lower low, which is this one. That's my swing lower low, right? So once we now have a swing lower low like that, and we now have an internal change of character, I expect the market to shoot all the way up from that zone. Shooting all the way up, my first target can be the previous internal higher high, which is this one. Right? This can be your first target. Your second target can be that supply there. Your third target can be, so this will actually be a swing trade, a beautiful swing trade. First TP, second TP, third TP there at the top. Right, so from where it is right now, I'm expecting it to go up. Remember what I said in the beginning, Crash 500 is a highly manipulated pair. If you don't know what you're doing, stay away from it. If you don't know what you're doing, stay away from it. Come and get mentorship from people like us who will tell you all of these truths, that it's a highly manipulated pair, and it takes a professional trader, someone who has been in the game for a very long time, to understand what I'm saying. Right, so here at the bottom, I said this is my swing lower low. From there, I'm expecting the market to go up. Right, we go down to a lower time frame, 4 hour. On the 4 hour time frame, all I now need is confluence of entry. Confluence, extra confluences for my entries, right? Extra confluences. I can see I have a sort of like a channel there. That's a channel to the downside. I know that the break of that channel to the upside is going to be another entry point that someone can actually utilize. That's an entry point that someone can actually utilize, right? There's an entry point that someone can actually utilize. This one, the break of that trend line. You can use that as an entry point going up, right? Then also another thing, we now want to identify internal key zones. That's the first internal key zone. You can see that there's a resistance there, strong resistance. You can also use that as your first target as well. Another key zone that I'm looking at. Is that one as well. So these are the key zones that I'm particularly seeing. So you can use this as your first target, second target, up until the market comes all the way to that final target at the top there, right? But this is actually a very, very beautiful swing trade. Very beautiful swing trade. So on the 4 hour, we are done. We identified our key zones. Go down to the 1 hour. So this is the 1 hour. I just want to find this trend line according to the 1 hour. Right. So now on the 1 hour, I want you to listen to me carefully now. You see this? It came the first time on that swing lower low. It came the first time here. The first time there it came, it went up. right? The second time it came, it went up. That double bottom on its own, it's actually liquidity generation. That double bottom on its own is actually what we call liquidity generation in trading. Liquidity generation, it's simply, this is an art that the smart money guys use to actually trap or to take out people's stop losses. Remember, institutions, for them to enter into the market, they need what we call liquidity. And liquidity, it comes in so many forms. One of the forms of liquidity is that double bottom. Let me just remove this trend line. One of the forms of liquidity is that double bottom there, the bottom. Because retail traders, that double bottom, their stop losses are just below that double bottom. All right? That's the first point. So now, if their stop losses are just below that double bottom, it means there's a lot of liquidity lying below that double bottom. If there's a lot of liquidity lying below that double bottom, it also means the institutions are most likely to take out that double bottom before they push price all the way up. So if you notice, that double bottom, it was actually taken out. Here, this double bottom, they came all the way back down, took it out by this move down. This move down was a move to collect liquidity. This was a move to collect liquidity. This was a move to collect liquidity. Personally, what I do now, once this market comes and takes out liquidity like this, and then that's my major zone where I'm expecting the market to go up, I start buying actually from the outside there. I start buying hard from the outside there. My stop loss will be just below this candle that took out liquidity. My stop loss will just be below here. I buy. Meaning, if the market comes back on top of the zone there, I can actually shift all my stop losses to entry and just leave it going up. After I know that this is a major zone that I'm expecting the market to go up. Liquidity was collected because of this double bottom. So after that liquidity was collected by this double bottom, the market went on to change character there. That's a change of character there. You see the it broke. That's a change of character. And the change of character, it means we're now going up. Right? It means we're now going up. And since we're now going up now, what you now need is another entry point. The first entry point, you could have entered outside your first entry point, you could have entered outside here like me. Another entry point, you could have entered after the market came above your major zone here. You could have bought there. This trend line, you could have also bought upon the breakout of the trend line. But the higher probability sell buying opportunity now is the one after the change of character. After the change of character, I now expect a pullback where into my major zone. So here I put my Fibonacci from point A to point B there at the top. Point A to point B. Right, where do I expect my buy opportunity now? Where am I expecting my buy opportunity? Where am I expecting my buy opportunity? I'm expecting my buy opportunity either there on the same zone where it took liquidity. If you notice where my gray zones are, if you notice where my gray zones are to the left, that's still a key zone. Here, then here it faked out. It faked out. Someone can call that a fake out, but that's not really a fake out. When you mature in trading, you realize that most of the things that you're calling fake outs are not even fake out. That's not a fake out. This is not a fake out. It's actually a move to collect liquidity. That was a liquidity sweep. Liquidity sweep, these are the institutions collecting liquidity, which is fuel before they push price up. Right? So there are so many ways in which they generate this liquidity and collect liquidity. So now this same zone, this one as well, is also a key zone that the market can come to. So that's also one major entry point that I'm seeing. So you can take buys there. your first target, you can target that high. But remember, I said this is a swing trade. You can target this first high or that first key zone there, the top, because it can come all the way to the top. They're coming all the way to the top. That it will be a higher high. After creating a higher high, it can give a small pullback before a continuation. It can give a small pullback before a continuation. Before a continuation to the next major zone, which is there. So this is what I'm seeing now on Crash 300. This is a beautiful swing trade. Beautiful swing trade. If you want to master how to trade Crash 300, we have a mentorship group, we have a signals group, we have almost everything to help you, especially if you're a beginner or you're an amateur in the industry. So we have a mentorship class, we have a $1 million class where we teach people how to master the markets. So this is a simple buying opportunity, major buying, swing buying opportunity actually. Remember I said that's an entry point there. At 88% Fibonacci retracement. That's your entry point there. That's a high probability entry point. There at 88% Fibonacci retracement. There. So that's where we are going to also enter further buys there. That's where we're going to enter higher probability buys there. If you go down to 30 minutes, you actually realize on that zone as well. You see that zone that I marked 88%. You realize that if you stretch to the left, there's also a demand there, an unmitigated demand, which is a double confluence now. Double confluence there. So I have a double confluence. Already. I have an unmitigated demand on 30 minutes, and I also have a key zone there on the 1 hour, and I also have a trend line retest zone as well. So it has a lot of confluence. There is a Fibonacci retracement, which is 88%. There's a key zone. Number 2, number 3, there's a trend line breakout and retest zone. So all those confluences are confluences. So this is one of the pairs that I'm going to be also analyzing with you, for you guys here on YouTube for the next coming days. I'm going to be analyzing this pair with you guys. So even today, later today or tomorrow, I'm going to show you the entry that we would have taken. We have a signals group where we're actually going to enter this trade. Me, alongside with my students, we're going to actually enter that buy there. That's our buying zone there. So guys, I'm done here. I'm done. This is one of my secret strategies that I use to trade Crash 300. One of my secret strategies that I use to trade and make money trading Crash 300. It's highly volatile pair, highly paying pair. It pays big time, but in as much as it pays big time, it's also highly manipulated. They manipulate it so much to make sure that a lot of people their money is taken out. But us as people that have been in the game for a very long time, we know what we are doing, and we know the manipulation techniques that they use. So guys, I'm done here. Make sure you like the video, make sure you subscribe to the channel, and make sure you don't miss my next upcoming analysis videos, because they are going to help you in a very huge way in your trading. Thank you for watching. Thank you for liking the video. Thank you for sharing the video. Thank you for subscribing to the channel. See you in the next video.